I don't think we're going to go back to the days of Gary Gensler and Elizabeth Warren and the anti-crypto army. I think those are gone.
Hello, everyone, and welcome back to Fortune Crypto Playbook. I'm finance and crypto editor Jeff John Roberts.
And I'm senior reporter Leo Schwartz.
Leo, some trouble in the Middle East, I hear.
Yeah, I mean, we have the breakout of war, which a lot of folks in the Bitcoin community say is the best time for Bitcoin. Of course, it was devised as this currency that would exist outside of the reach of the government or of banks. And theoretically, it would rise when there's times of crisis. Although in this case and many others, that didn't really happen. It mostly stayed aligned with equity markets, right?
I mean, the thesis for Bitcoin, the world's going to hell, so go and, clutch onto this currency that's not subject to governments, but Leo, you love to trot this out every time. However, I've noticed Bitcoin actually seems to be doing pretty well. It's closer to 70,000, but the eternal debate is just just another risk on asset that you sell when things get troubled, but it's holding up so far. But we'll see. I mean, maybe this is the war where America spins itself into bankruptcy and the dollar plummets, and maybe it will be Bitcoin's time to shine.
I mean, the more interesting story, I don't know if it's really crypto related, but it's a different type of betting market that happened on Kalshi. The market was on whether the Ayatollah would leave office. Kalshi is in a bit of a tricky position compared to Polymarket because it's actually currently regulated by the CFTC under the US government, and they're not allowed to have markets related to war and terrorism. So even though Khamenei left because he died, he was assassinated, Kalshi was in a tricky position where they couldn't actually have a market based on death, and that set up some fairly interesting dynamics.
It is a crypto story because conversely, Polymarket, which does operate on crypto rails, it's possible to see the 5 insiders who traded and collected on that. Kalshi, by contrast, simply said, okay, and I think they took a big loss on this too. It's just like, everyone, here's your money back. This is off. And I think that's the right thing to do because, you don't really want assassination markets. I mean, I think someone said too, there's all these bets out there like, will Trump do this? Will Trump do that? And, obviously if, the president's assassinated, all those bets will get resolved. So you can't have that incentive out there. And I think Kalshi is trying to do the right thing. And as far as I understand, they had sort of advertised that, hey, this is in the fine print of this contract and this is how it's going to go. And I think Kalshi's taking a short-term hit. However, I think long-term, they're positioning themselves well because they're in this sort of death match with Polymarket. And if they can kind of get the legal and sort of moral high ground, they might put them in good stand. I don't know. What do you think?
To be clear, I'm pretty sure the way they resolved it wasn't necessarily clear when people were betting on the market, which is what they said ultimately was this will be resolved when it's confirmed that he died. However, any positions after that will revert to whatever price was active when he did technically leave office. And I think because of that, a lot of people lost money when it wasn't exactly clear if he was alive or not. And Kalshi agreed to basically cover their losses. I mean, the financial implications aside, it does just raise this broader question of prediction markets have exploded in popularity over the last year, more than I think anybody, including probably Kalshi and Polymarket, could have imagined. But regulators and the public really are racing to catch up to understand what that means. The CFTC, which is the smallest regulatory agency in the US government, certainly doesn't have the capacity to police this. And I think even a platform like Kalshi doesn't really understand how to fit within the law. They're constantly pushing the bounds. They want to balance that with their own PR. And it's creating all these really tricky situations that ultimately boil down to this question of, should we have betting markets on whether world leaders are going to be assassinated or not? And I think that's a tricky ethical one that will be worked out over the next couple of years. But it seems like these platforms are here to stay.
Yeah, imagine if these things were around in 1914. You could bet on whether Franz Ferdinand will come back from Sarajevo or not. It's I don't know. I do think there's just such a powerful signal, and they're becoming part of the news cycle. And like it or not, if there's a big prediction market signal that X is going to happen, I think it's very hard to look away from that. I don't know if we're going to put this genie back in the bottle. So it's fascinating. And I would argue though too, I mean, yes, it's getting messy with Kalshi, but they are at least trying to, each Kalshi bet is a legal contract and they're sort of trying to do it right. Whether they are or not is, I'm sure people have different ideas. Polymarket's dispute resolution though, have you seen what they're doing there?
I mean, I just saw the insider trading that inevitably happens whenever there's a large scale world event.
Yeah, and there's always going to be edge cases, right? Like one of the other controversies was like it was like, will Zelensky wear a suit when he shows up in the White House? And he showed up in this kind of like military fatigue thing that kind of was a suit, and but it was sometimes there's just going to be these edge cases. And in the case of Polymarket, their dispute resolution system is they kick it to these like token holders. If you have this many tokens in this weird currency, I can't even remember what it's called, you can vote and resolve the bet. And I mean, come on, you want to talk about like not above board sort of shady mechanism. I think they're going to have to. I assume Polymarket's racing to catch up and has hired some good lawyers. But yeah, it's a wild story out there.
Although when they do, my understanding is that they're currently in some sort of beta launch in the US with a gated amount of users. When they do launch their full US platform, of course, they're going to have to shift this entire system to be under whatever Kalshi's understanding of US regulations are. And something like, will Khamenei be assassinated, will not be allowed. Although, then again, a year ago, I would have said you wouldn't be allowed to bet on sports on Kalshi on a federal level, and you can now. So I think any guess of where the law is headed under this administration is sort of out the window.
Will Kalshi sort of get benefits from positioning itself as like towing the line all along? I thought, will consumers really care? Or will they just go whoever has the better odds in marketing? I don't know. Or who has a more liquid market? But final question, I wonder if like Polymarket's sort of contemplating, hey, this kind of shady offshore thing is working for us. Yeah, bet away. Because they not only had the assassination markets last year, where I live in Southern California, everything was on fire, and they had arson markets. You could bet when the fire would go out, and you sort of see the problem with that. Looks like the fire's almost out. I better go throw a cigarette butt out my window. It's the moral hazard here is enormous, and hopefully regulators and everyone catches up. But for now, it feels a bit of a free for all.
And this leads into our next topic, which I know is a favorite of yours, and goes into this broader issue of whether there's some sort of moral bankruptcy about all of these products becoming so ingrained with our financial system. The New York Times opinion section just published an op-ed from some former Biden officials, basically dancing on the grave of Bitcoin, which is down. It's not that down, but it's down, and saying, look, we told you crypto is useless. I know that you objected with that take in particular.
Yeah, I wrote my newsletter on it. I mean, Leo, even you, who are, I think have got, sympathies for Elizabeth Warren and her crowd and your buddy Gary Gensler. I mean, even you, if you read that op-ed, I mean, it was so clearly in bad faith. It was just wrong. It said like, these Biden era guys were like, yeah, we took a look at it and we talked to big tech companies and they said it was just a glorified database and this is all useful. And now it's going to fail because it fell below $70,000. It was just so disingenuous and wrong. And they tried to portray themselves. I mean, they're the ones who like miss Sam Bankman-Fried, and were found in federal court repeatedly, for arbitrary and capricious behavior. It's just like, why don't these people just go away? It's just this like dwindling band of like Biden apologists. And yeah, guys, you blew it. You had your moment in the sun, and you let like senescent old man, take his nap while you guys ran everything, and you blew it. So just go away would be my take.
I'm going to push back in one way here on this. Maybe this is a nerdy legal argument, but the arbitrary and capricious argument was about very specific cases, in particular the grayscale one and then a rulemaking one. They had these very high profile lawsuits against companies like Binance and against Coinbase that raised real novel questions about how securities regulation should happen in the US. And they were certainly not headed toward losing there. A lot of judges were on their side. And the reason those cases were dropped wasn't because their arguments were bad. It was because the Trump administration took over, and you can either take this charitably or not, but the crypto industry donated a huge amount of money and then the cases were dropped. I think these cases would have certainly established that companies like Coinbase, like Ripple, like Binance were probably stretching the law and likely breaking it. So yes, their argument was certainly extreme. For them to say there is no technological use for crypto, I think we can all agree is off base. But at the same time, they're pointing out the crypto industry is the crypto industry. The reason that they were able to win and push through was likely this massive amount of money that they donated, and not necessarily the merits of the arguments they were making, at least from more of a legal perspective.
Oh, yeah, that's fair. I mean, to be clear, I think the Trump administration has gone way too far the other way, and there are certainly objections there. Just my problem with this op-ed, it just felt in bad faith. And they also, too, they raised the issue of like, they'll be asking for a bailout. And this sort of notion has been thrown out there, and I'm sure it's Liz Warren staffers again, that the crypto industry will come looking for a bailout. I've heard no one ever contemplate that. I think, even the crypto industry recognizes it's a bridge too far, but you could tell it was coordinated. For some reason, like Liz Warren is back again, and that was a talking point. And this op-ed lands the New York Times around the same time. I mean, I get op-eds too, and if you have a catchy headline, you publish it. The point is to stir the pot. But if there's something in there that's just like outright wrong, or an obvious point that's not even raised, I kick it back to the op-ed writers, like, guys, just at least acknowledge this and then go on your tirade. But I mean, this was just like this is what people can't stand about progressives in the New York Times, this sort of stuff. However, the Times does great reporting, and they've got, they're a great outfit in a lot of ways. But, I think even you probably, had to kind of roll your eyes at this one.
I think a few lines were over the top. If they'd cut them, I am sympathetic to arguments that the Biden administration made, which was we were trying in good faith to push back against some of the excesses of the industry. And look what happened. They spent $200 million. They elected an administration that was favorable, maybe because of the donations, maybe not. And then that administration is self-enriching itself with this technology that, by the way, isn't really doing that well right now, even though everything's in its favor. So it's interesting questions. Was it done in the most tactful or good faith writing technique? Probably not. But, I think it's a good framework to explore moving forward.
Right. But I mean, I think, hang on, you're being too fair to the Biden administration. Yes, there was real concerns there policing. But, Gary Gensler just kind of like went rogue and tried to burn it all down. And I don't think there was a mandate from that, from, Congress to the people or anyone else. And, I think they reaped what they sowed. And, the pushback, what we're having now, I don't know, there's certainly a lot of concerns. But, my goodness, I just think, why does no one ever just like kind of go away in disgrace anymore? It just seems like the era of scandal is done. We see it with our politicians with, go away for 5 years, then write your book or something. But this stuff, that's just the age we live in. Here's a positive topic for you, Leo, if you want to stay on the upbeat things of crypto. How about Circle? Did you see their earnings? Were you surprised?
So Circle has long been a successful business in that they have a massive cache of their stablecoin USDC, and they can control a huge amount of the yields off the stablecoin because the reserves of the stablecoin are basically in short-term treasuries and other dollar-like assets that give back a significant amount of interest. So they're always going to make revenue off of that. The issue with Circle has always been that they haven't diversified beyond that one revenue stream. So yes, with this more recent report, they were able to share that they had a lot of revenue, but the revenue is still coming overwhelmingly from this one source. I think when I did the math, it was something like 95% of their revenue is coming from interest. And they've launched other projects. They have their ARC blockchain now, but the stock performed well in the short term and they had a good earnings report. But I think the same question has persisted for years, which is, as a company, especially as other stablecoins are coming to challenge them, will they be able to continue surviving with this very singular business model?
Yeah, I think that's a fair take. And the reason why, for anyone who missed it, their quarterly earnings came out, stock went up like 30%. And it's because like year over year, their revenue went up, but it wasn't actually by that much. And I looked at quarter over quarter, it was like 2% or something like that. And I think they just got lucky because we were all expecting more interest rate cuts by now, but the Fed has sort of held the line. And, the company just continually fails to diversify. But maybe it won't have to. If the USDC keeps getting adopted, they can, it can be run by like a chimpanzee. And, that business is so simple. Just collect the interest on the stable coins. And this, I think, will help Coinbase as well. But I think you're right. It's more luck than it was, shrewd management. And I think Circle looking for other revenue streams, and I want to see too if they're going to start cutting costs too, because the company seems based on adding more and more executives who fly first class to crypto conferences around the world repeatedly. But you can get away with that if you've got like a big fat monopoly, and maybe they do in USDC. So, good for Jeremy. Congratulations to Circle. Enjoy.
I think it's a good point where you have to say that Circle is certainly one of the more successful crypto companies right now. And I think in a lot of ways, they did pioneer stablecoins in the US. You can look at our past reporting to see if they stumbled on that or if they really invented that themselves. But even if they are entrenched right now, and even if they do have one of the most popular products with USDC, it's unquestionable that there's so many challengers now. And there's also increasingly a system where I think a lot of platforms and companies are going to be stablecoin agnostic and not necessarily pick one winner, that it does raise questions as to what Circle's prospects look like in 5 years if they haven't really been able to find other revenue streams other than the interest earned off of USDC.
Yeah, I think we'll have to come back to this one because you and I have been predicting that for a while. But, conversely, speaking of earnings, look at PayPal. I mean, they had a disastrous earnings where they're basically like, yeah, our revenue is going down. For a public company, that's terrible. There's talk is Stripe going to buy them? Is Elon Musk going to buy them? Remember, PayPal was fairly early among the corporates with the stablecoin, and people aren't adopting it. The only game in town is USDC, at least in the States. I mean, I'm going to be interesting to see Tether with their regulated version of it. I think they got Deloitte to audit it. Will they be able to make inroads with that? Or is it simply like a sticky product? And, for whatever reason, it's just going to be USDC is the stablecoin here. In theory, it shouldn't be, but that's how it's playing out. I don't know why, but, Ripple's got a stablecoin, PayPal does. And, in the States, at least, it's kind of like I don't want to call it a monopoly, but I guess one to track. Any last thoughts on that, Leo?
I think it leads into our next topic, which is Bridge, a stablecoin company, which has really been a pioneer in saying this stablecoin itself doesn't really matter. Like we're just going to be, no pun intended, a bridge to allow companies to adopt stablecoins and meet them where they are. Bridge just announced a new partnership with Visa that's sort of throwing out this paradigm of fiat versus crypto and saying you can have fiat and crypto. The issue with stablecoins has always been you can't use stablecoins at a store or at a restaurant. And my understanding of this new partnership is it's basically allowing an off-ramp where if you have an account that has stablecoins in it, it allows you to be able to more easily pay with them at actual stores.
The future is kind of taking shape. Yeah, the narrative was been when Stripe launched its blockchain, or whatever the tempo, whatever the thing's called, MasterCard and Visa's share price fell 5 or 10%. However, it seems like, as you're saying, the world is emerging where people in developing countries are going to have stablecoins that come in from remittances or wherever, but spending them's not easy. But who's got the networks? The Visa rails are everywhere. Well, speaking of stablecoin, this is probably a good time to segue to our guest. Delighted to say we have old friend of the show, Kristin Smith, the top policy hand in DC for years on the crypto front, who's going to bring us up to speed. Kristin helped get the Genius Act passed the stablecoin thing and sort of went out on top. She's on to a new thing with Solana, but she still has all the DC gossip. So let's turn to her. Welcome, Kristin.
Thanks for having me, Jeff.
Kristin is, for those of you who don't know, one of the most OGs of the OG on the crypto policy front. She single-handedly built the Blockchain Association, which became one of the preeminent sort of, policy lobbying shops in DC, and is now working slightly less hard, I hope, but is still super plugged in. And Kristin, I'd love to ask you a little bit about, what are you seeing in terms of crypto policy in DC right now? What's going on now and what's going to happen in the next few months?
Yeah, it's been a remarkable turnaround since the new administration. Obviously, a lot of the work I was doing before at the Blockchain Association was very defensive. There was a lot of litigation going on between the crypto industry and the government, both ways. And what we have now is actually an opportunity for proactive policymaking. And what we saw in 2025 was tremendous progress. We saw the Genius Act got signed into law. A lot of the negative regulations that have been put in place got pulled back. And we saw the SEC launch its Project Crypto to begin the work of providing additional guidance within the authority they already have. And so 2025 was an amazing turnaround year for crypto policy. And as we get into 2026, what we're seeing is there's still a lot more work to do, particularly around market structure legislation. That is something that is very actively being negotiated in the Senate right now. And then also the regulatory agencies, both the SEC and the CFTC, are now jointly working on Project Crypto and continuing to put some work in place. So I think that is kind of the key focus right now. In addition to that there's a bunch of tax policy that needs to be cleaned up. So we are sort of in the middle of trying to put the details onto paper and get those enacted into law as an industry and as a government. And so, tremendous progress has been made, but a lot of work to do. And there's a lot of people working away hard to make it all happen while we have a friendly environment.
Yeah, watching it from a distance, it seemed like everything was on a glide path with the market structure. That's the Clarity Act, right?
Correct.
And I've got to ask, though, were you surprised when, it all seemed to be humming along and then, Brian Armstrong fired his fatal shot and sort of, I don't want to say derailed, but certainly set the process backwards. Were you surprised by that, or were a lot of people in DC surprised when that happened?
Well, I'm not surprised that this is taking a long time. I've worked in DC for about 25 years, and 10 of that I worked as a staffer on Capitol Hill. And passing comprehensive legislation through the House and the Senate and getting it to the president's desk to sign is an incredibly difficult, complex, and rare process. Like, this is not something that happens every day. And it takes years to get these big bills done right. I think it's actually pretty amazing that the Genius Act was able to move so quickly in 2025. That being said, though, that is actually a fairly simple bill compared to the different topics that the market structure legislation or the Clarity Act is trying to cover. That being said, though, I think there are daily conversations going on between Democrats in the Senate, with the Republicans in the Senate, between the Senate Agriculture Committee and the Senate Banking Committee, between Congress and the White House. So they're working through these issues, but there are issues with the text, right? And I think that what happened with the last markup was that we saw, as an industry, the public saw the language that the committees had been working on for the first time. And there were actually, quite a bit of issues that needed to be worked out. I'm not sure if the way it sort of played out publicly, was maybe the best. But I think, these issues do have to be worked out, and they're being worked on now. And so, we are where we are, and we're going to continue to push ahead. The one thing I would say is there's sort of this conventional wisdom in Washington that during an election year, we have a midterm election coming up in November. It makes it very difficult to get legislation done. I would say I do think crypto legislation is an exception to that rule, just because there is a desire on both sides of the aisle to get something done. And I think that, whereas maybe a typical issue, it might be, around the March or April timeframe that getting any progress done sort of falls apart. I think crypto's in a different spot. I do think that we'll have a window, through August or maybe even through December to get this done. And, that we will ultimately see some progress because, you've got Chuck Schumer that wants this done. You've got Donald Trump that wants this done. When you have kind of those two opposing sides, like it should be doable, but there's a lot of work to do and a lot of people that are working to solve the outstanding issues in the bill.
And since you know it from the inside, who are the key players to watch? You mentioned Schumer. Who else in the Senate or, on Capitol Hill and generally should we be watching as this thing evolves?
Well, so the bill passed the House back in 2025. And I would say on the House side, French Hill in particular is going to play a very important role after the legislation gets through the Senate. So he'll come back on stage. But right now the game is in the Senate. And one of the reasons that this bill is so complex is that it has jurisdiction in two different committees because the SEC and the CFTC fall under the jurisdiction of the Senate Banking Committee and Senate Agriculture Committee, respectively. So that in and of itself makes it more complex. But I think the chairs of those committees, Tim Scott and John Bozeman, are playing a very large role. And then you have the Democrats. There's a group of 12 Democrats have signaled their willingness and openness to engage on crypto policy. And I think that that includes folks like Ruben Gallego, who is a senator on the Senate Banking Committee. It includes Mark Warner, who's a longtime senator, also big on the Intel Committee. It's sort of that group is playing a big role. And then I think what's really unique, and one of the reasons why this bill does have a chance moving forward, is that the White House is so involved. And we have, David Sachs and then Patrick Witt, who are personally involved in trying to get some of these outstanding issues solved. The other sort of wrinkle in all of this is, in addition to crypto, Congress, and the White House, you actually have the banks and the securities firms. So for the first time, we have sort of the TradFi world that actually cares about crypto policy because they are, either concerned for competitive reasons or, they have their own interests that they're trying to address. And so it is a lot of players. It's very complex, but again, everyone is talking, and it may have slowed down, but it is continuing to move forward. And there's commitments on all sides to getting something done before the end of the year.
I did want to ask you about the banks, which strike me as a bit of a sleeping giant that is now woken up. And, I've heard people tell me, well, they have a fairly easy play because they can go to any senator and say, look, all these community banks in your state are, whether it's true or not, are going to lose from this bill. And I'm just curious, it feels like the banking lobby, if they're engaged, that's a very powerful opponent you didn't have before. So how is that going to play out?
Yeah, no, it is a powerful component, especially with Congress, because as you said, there are community banks everywhere, and they all know their local congressmen and their senators, right? They have a very sort of natural advocacy base that can get fired up. I do think, though, when it comes to the White House, I don't think the banks are on the best terms with the president and the White House. I think there's obviously, they have a relationship there, but I do think that the crypto industry as a whole is a lot closer with the Trump administration. So, but yeah, right now, the reason that, the bill is stalled is, or the next hurdle, I should say, is that we need to get the market structure legislation through the Senate Banking Committee. And the Senate Banking Committee has been dealing with the banks for a very long time. And notably, Senator Tillis, who is a senator from North Carolina being the home of many big banks and small banks alike, he is concerned about this yield issue, which is sort of the issue that the crypto companies and the banks are fighting over. And so, if you lose him, you lose the majority. You need a majority of votes to get a bill out of the committee. It's 12 Republicans, 10 Democrats. You lose one Republican and you have no Democrats, it's an 11-11 tie. It doesn't move forward. So it's really important that, there is some sort of deal struck before that can move forward. And then there are several outstanding issues that need to be negotiated with the Democrats in order for the legislation to get through the Senate floor. Because you do, if you remember, you need 60 votes in the Senate to stop a filibuster, meaning a single senator standing up opposing the bill. And so if you get 60 votes, you can end the debate and move forward towards passage. The way around needing 60 votes is to attach something to a must-pass bill. This is the way most legislation gets done today, right? You add it to a big appropriations omnibus at the end of the year, or maybe the National Defense Authorization Act, or one of these big must-pass bills often carry different pieces of legislation. But the process to add something that is outside of the committee jurisdiction of something like appropriations or the defense bill is you have to have the sign off of the Republican and Democrat on the committees in both the House and the Senate. And we have, the ranking member of the Senate Banking Committee is Elizabeth Warren, and she, under absolutely no circumstances, is going to support any sort of compromise on crypto legislation. And therefore, the crypto bill needs to move as standalone legislation. So it's actually a pretty rare to see something like the Genius Act is very rare to see a standalone bill of meaningful substance passed. And so, there are issues that need to be negotiated with the Democrats in order to get the bill forward. But, Senator Schumer, who is the minority leader for the Democrats in the Senate, has personally attended meetings. He has talked about the importance of finding a deal and getting this done. And I think as some of these issues get solved and deals get struck, it puts more focus on the remaining issues, and that ultimately this is something that can get done.
Super interesting. Yeah, I didn't know that it can't pass as part of omnibus legislation because Liz Warren won't spring it. That's interesting to me. Very quickly, so which date should we watch for? You said maybe late August or else December is the best chance this is going to move again?
There are active negotiations going on all issues right now, and I think that the pressure on the banks, I think, is pretty big to come up with a deal. The pressure on the crypto companies to make concessions is big. We've seen a lot of this play out on Twitter with the White House weighing in. And I think that, we could see a deal come together in the weeks ahead. And I think, we're in March now. I think if in March or April, the Senate Banking Committee is able to mark up a bill then you can move it on to the floor. And, July tends to be like kind of the big deadline before August to get something through the floor. That being said, if they need more time, I think they can get more time in the fall. But I think the next 6 weeks is going to be sort of critical for getting, the bill moving through the committee and getting it to the next phase of negotiations.
Very helpful. And I promised Kristin too, I want to know what's new with you. Tell me about this Solana Policy Institute. I think we recall the days when it used to be just you in Washington. You were the, crypto policy voice. And now there's like 17 things.
It was a lot easier back then. There were a lot less people working on these issues. So I joined Solana Policy Institute last spring. We're a small team in Washington, DC that is working on public policy issues with the interests of the Solana ecosystem in mind. I think, what we've seen over the past several years is more and more people, whether they be on the communication side, the legal side, the lobbying side, we're seeing more and more people working on these issues, which I think is necessary because, proactive policymaking, not defensive like we'd been doing for years, but now proactive policymaking is incredibly complex. And I think that complexity requires specialization. And so, for example, with Solana, if you look at, what is Solana here to do? The people who are building on the Solana network are working towards internet capital markets. We want to bring all markets on chain and allow them to interact with one another. Well, that requires, attention on regulatory issues that might be different compared to some other actors in the ecosystem. I would say for the most part, as I look across the crypto advocacy space, the crypto companies and crypto ecosystems are 90% aligned on all the issues. There are some differences. By having these different voices, it allows the industry to sort of work behind the scenes, try to come up with their own compromises, and then take those ideas to government. And so, it's a much more complex machine than it used to be. It was a lot easier to play defense because you could do that with a small number of people. But now that we have to, put the pen to paper, we have so many, qualified professionals in Washington that are helping to get this done. Tell
me if this is unfair, but sometimes I joke that we now have big crypto next to big pharma and big oil and, all the other big tech and stuff like that. And, I think that's just sort of the way it is now. Do you think that's a fair characterization? I mean, I think crypto definitely has a lot of influence in Washington. When I think of something like a big pharma, I think of a lot of big companies that are, working with the government to sort of increase their position and their revenue. I think when I look at crypto, I do think there are many of us in this space that care very much about the individual software developer, that cares about the small startup. Something like Solana Policy Institute, we can look at the interests of the little guy or the individual actor or the small business and figure out how that works with the policy. So I don't think of it as all being, big giant crypto companies. That being said, obviously the large companies have a presence in Washington as well. But if you look at folks like Solana Policy Institute or the DeFi Education Fund, or even the Blockchain Association, my old organization, there's a lot of looking out for the individual who is participating in crypto. And I think that's a distinction from the big guys today. So we sort of have the best of both worlds. I think we have a very pure mission at heart, but the industry is very organized and is able to rally together when we need to play defense. Gotcha. And last question. I remember the days when crypto was almost too small to be partisan. It wasn't coded Republican necessarily, but obviously, in the last few years, I think, Gay Gensler sort of forced this sort of partisan split, and Trumps, for better or worse, have coded it, MAGA and Republican. Do you think can get back to an era where, there isn't really, crypto is not necessarily, viewed as Republican or Democratic, and like once Trump is off the scene, what happens next? In the last election, I think this did emerge as more of a bipartisan issue, and we saw candidates on both sides be pro-crypto. I think historically, Republicans have been more open-minded than Democrats. As I mentioned earlier, there are 12 Democrats that are working very hard to try to get
cut a deal to get this bill done. And so I think that this is a bipartisan issue. And I think particularly as the technology integrates and converges with the traditional financial world, this isn't going to be this isn't going to be a technology or an industry that anyone's against. It's just going to be, like any other industry, one that exists. And, as issues arise, there may be some partisan differences. But I don't think we're going to go back to the days of Gary Gensler and Elizabeth Warren and the anti-crypto army. I think those are gone. And I think, going forward, this is, the Genius Act said you can have dollar-backed stablecoins that are, minted on top of, blockchains. Like you can't undo that. That is in law. And so I think we're just in a much different place today, and that, this is a technology that is here to stay. It is something that the market will sort of dictate, where it goes in terms of use cases and adoption, et cetera. But the days of partisanship, I think, are over.
Yeah, let's hope you're right, too. We can just sort of lean into seeing what we can sort of, benefits we can reap from this technology. Well, Kristin Smith, one of the truest sort of veterans and pros out there, thanks so much for joining us.
Thanks for having me, Jeff.
So, Jeff, did that make you more bullish on the prospects of crypto legislation passing?
Well, I mean, you're more the expert here, but I mean, Kristin, I'll defer to her. She seems to think there's a real chance for July and or December. And her case being, since the White House is so heavily behind it, they'll sort of give it a big push. Although I think that's trouble that I didn't know this has to pass as a standalone bill. The way these things usually work are, we have like a defense bill, we have to pay the troops, and so you stick it on and it gets rammed through. But the fact that Liz Warren is a gatekeeper on that means it's got to pass as a standalone bill. So what's your take? Here, I wonder if there's a prediction market. I bet there is.
I think it's probably around, optimistically, 20-25%. Maybe, I think prediction markets have a more crypto native audience, so they might be more bullish on this, but it still seems like there's so many hurdles that they have to overcome. One of which is this simple question of yield on stablecoins has still not been worked out. There's been this series of summits at the White House between the banks and crypto for weeks now, and they still haven't come to a conclusion. And that's just the tip of the iceberg. Obviously, concern over Trump corruption with crypto is only growing. We're headed toward the midterms. I've always been a bit pessimistic about these bills, but then again, Genius passed, so crazier things can happen.
Yeah, we've seen strange things. I just confess I don't know enough about it. It just seems like a bit of an uphill fight because once the banks brought their lobbying power to force, but then again, the Trump administration maybe decides to go, sick a bunch of like antitrust suits or God knows what on them until they play ball. It's really one to watch. So stay tuned. I don't know. Put me down for 35% if there's a prediction market out there. I don't think actually we're allowed to. Where is it in our journalistic code of ethics, Leo? Can we bet on outcome of stories?
I think we can probably bet between the two of us and maybe have Ben as an in-between. He can be our bookie.
That sounds good too. Yeah, just for, the folks out there, there's a convention in financial journalism where you can't really hold stock in companies you cover because the temptation would be too great and stuff like that. I mean, obviously a lot of these guardrails are broken down a bit, but it does seem as prediction markets become I predict they're going to be part of every news story. We perhaps might integrate them into our coverage someday because I just think, I hate to say it, I think they're so cool, but that's a topic for another day. I think that's a wrap, everyone. Thanks as always for listening. I'm Jeff John Roberts.
And I'm Leo Schwartz. See you next time.